What's going on, my friends? In this video, I'm going to go over two trades I had trading Tesla options here on Friday, November 8th, 2024. And I'm going to show you a couple of secret features that I think are really good for trading options using interactive brokers to get around certain problems that you might face. One of them is when you get the message, cannot have open orders on both sides of the same US option contract. I'm going to show you how you can resolve that. It's a little fix that I found, a little workaround that I think is good. So let's get into it right now. Subscribe and like the video. Let's go. So here's my Trader Workstation screen. You can see I traded these two options here today. I traded the 315 puts and the 315 calls, both of them. I had near perfect entry on the 315 call trade. This one, I'll be honest with you guys, this trade was the fastest $208 I made in my entire trading career, I think. And it was probably the most perfect entry I've had in my trading career also. I didn't know I was gonna get that perfect entry because the way that I enter these types of option trades is I typically give myself a range of where I'm entering the trade. I don't just have one entry because oftentimes when the markets are moving on options expiry or close to options expiry, they move very fast into an area and you wanna get something on the table. You wanna put on some risk. And there's a good chance that if you don't have your order at least somewhere in the middle of the range, you're probably not going to get the fill. If you have your order all the way at like the end of the range, it may not go there. You probably will not get filled. I like to spread out my orders around the range where I'm going to be entering the trade and exiting the trade. That's just how I do things. Let's say you have like, you know, 2 buy orders in around $2 or something. And you also have a sell order in to take profit at the same time. You see I get this message saying cannot have open orders on both sides of the same option contract. And the way you get around this is by using this feature right here. So you right click on your active order and you select pause execution. And then in the meantime, you transmit your other buy order. And the reason why you would do this, I'm going to show you in my video exactly why I was doing this, because the market was moving very, very fast and I didn't know which side was going to trigger first. I didn't know if my other buy order was going to trigger first or if my take profit was going to trigger first. So when the markets are moving around on option expiry like this, I'm kind of going back and forth. I'm doing pause execution, transmit the target, pause execution, transmit the scale in order, etc. So let's go over my trade session now and hopefully you guys can get a few interesting nuggets out of that. And if you have any questions about how I do things, just leave them in the comments below. And remember to like the video and subscribe if you like this content. If you look at it contextually, basically I opened up my Sierra charts this morning and I'm scrolling through all my markets, seeing what's mostly interesting. You know, I have altcoins, I have Bitcoin, I have the indices, I have stocks, and I'm getting the stocks data from Sierra chart. Now, one thing that stood out to me was Tesla was skyrocketing ever since the open. And I actually didn't see the open. I only showed up a little bit after the open today. And Tesla was the only stock I saw, the only thing on my radar that had just a straight line up, and it was probably trading around 310 at the time I looked at it, and I was like, wow, there's no context here, there's nothing to short this. But if it does get up to about 315.92 and start going up into this area in the daily time frame, you can see there's a little bit of context there I have. Then I'll be interested maybe for some kind of a short side scalp. And then I took the short in front of 318.50 as high as 320. That was kind of my maximum level. And how I got the 320 was basically one of my other indicators was indicating to me that the average intraday volatility was about 150 ticks, so about $1.50. Between $1.80 and $1.50 was the what I consider to be the overshoot range. So basically I took my highest level of my range, 318.50, and I add my overshoot range to that, and that gave me about a 320 on the upside, absolute high end of the range. If it starts reclaiming that, I gotta start getting out of the trade because I have no more context on my side to help me, you know, manage the trade at all. That was basically what I planned to do. So I planned to start scaling into a short. So I started going long put options as it was skyrocketing into about 318, 317, 318, etc. So we'll look at that execution now here on this video. Okay, so one thing you can see just from the start is that as soon as I started recording my screen, I'm already long one put option. So I didn't get the first execution on tape, but you can see I already have a second buy order down at 225. And if you guys want to know how I calculate the prices of my options based on the underlying stock, go watch the previous video I did because I kind of go over it in that video. And I do it mostly by hand. I just use the delta and the gamma, get an approximation, and then I just do a calculation in my head. And I know it's slightly inefficient to do it that way, but I've been trading them now. I traded Meta options 2 weeks ago. I traded Tesla options a week before that, and everything's been going pretty well overall with this particular trading style that I've been employing here. Even if I'm calculating the options prices very discretionary, very imperfectly. So I'm looking at the market go up here. I'm already long a put, and I'm looking at, and I'm basically saying as high as 320. And I don't think I ended up getting the second contract on at all. I only ended up getting the first one on, so I had that second buy order at 225, and now that I think of it, it may have been slightly a little bit too low. So we're skyrocketing up into about 319, and you know, just look at the straight line up. This is basically Tesla right from the open, just a straight line up, and getting extended going into that monthly level 315, and then overshooting up into my area 318.50 up to 320. 1850. You can give it about 160 ticks of breathing room approximately. So that's exactly what I said in the video there. 1850 on the high end, you can go. Yeah, so I was doing the calculation there. So about another $1.50 down, so say. So I'm doing calculations on the options and all that, and then I actually wanted to put a bracket order in, but I couldn't because I had a buy order in. And then sooner or later, the market started pulling back after it topped out. It didn't quite reach that 320 target. It reached 319 and something. And it started pulling back pretty aggressively, and you can see I started putting a target in there. I was calculating approximately where I wanted to put the target, and I ended up putting the target right around 415. Now I'd say one thing that's, you know, the difference between someone who's more experienced versus a newbie trader. A newbie trader doesn't have the same kind of market context and understanding that an experienced trader has. So they're going to be, you know, a lot more prone to panicking in and panicking out of trades. Like if you're just sitting there staring at the bid offer go up and down, you're going to go absolutely crazy and you're going to panic out of that trade. But if you have a real plan behind what you're doing, and you have real context behind the market, and you understand some context, then all of a sudden you can sit back and kind of detach and just watch what it's doing. You know, you can watch from a more zoomed out perspective, because as you can see, I'm using daily levels as well as intraday levels here for trading. And actually that 315 and something area is actually a monthly level, which is categorized by my supply demand system. So the market pulled back from its high, and then it kind of came back up, and then it chopped for a few more minutes, I believe. And actually this is when I started to play with the pause execution feature. And if you look at what I was doing here, I was basically doing that. So I have my second buy order down at 225, and I have that target at 415. And because I can't have both of them active at the same time, I was basically just pausing the execution on one of them. So if I found that the market was getting close up to the high $3 range, then I would pause execution on the buy order and I would transmit the sell order. Like, look at this. So I pause execution on the buy, then I do that with the sell order. So that's basically my method of having both a buy and a sell order in the same option contract at the same time. To get around the rule, basically, which I think is pretty efficient because it's only about 1 or 2 clicks. So I think it ends up just flying up here. You can see Tesla's shooting down to about 315 now, 315 and something. I'm not sure if it pulled back, and you can see it there. It pulls back to about 316 and something, 316 and a half. And I updated my order down to 410 because I did redo my calculation in that moment. And then I ended up just getting filled on that. That was a pretty nice trade. Now we'll go over to the call trade. This one happened a few more minutes later. So
it's possible to pick these up around $2, but I don't know if we're gonna get that.
Yeah, so that's exactly what I said. The first thing I said in the video as soon as I started filming was it's possible to pick these up around $2, but I don't know if we're gonna get that. So I was interested in picking up these calls around $2 if I can. And the reason for $2 is not because it's a psychological number. I mean, maybe it has something to do with it, but it's because that option price seems to align with the contextual level that I was looking for in the Tesla market, which was basically right around as low as 312, a price of 312. And again, how I'm categorizing that is using my system of supply demand zones and intraday levels combined. So you can see the lower end of that range on my daily chart is 313.80, and I would have been accounting for a little bit of overshoot down to about 312. So that was kind of the range of where I would have been willing to scale into this call option if we would get a quick pullback to the downside.
Minus the volatility from that.
I'm just fast forwarding a little bit through this because the market did move up for a little while and then it started coming back down. And I mean, the way it pulled back here, you had to be really on top of your game because it came down so fast. You had to absolutely see this move. Like it was almost unbelievable how fast it was moving. Like it literally moved like $3 in like a minute or something or less. So we'll just keep fast forwarding here.
Around $2, man.
So this is when it started moving down a little bit. I got my buy order in around $2 and something. I think I was front running $2. And now watch what I do here with the order execution, because this right here is what you call adapting to the bid offer spread. So I have my buy limit in at 201. I don't know if I'm going to get filled on that, but watch. The market's coming down. Look at the bid offer spread. We're bid at 210, 208, 207, 205, 206. I'm not trying to be a cheap bastard here, so I immediately move my order to 210 because I want to get something on the table in this range. So I'm on the bid at 210. I'm filled on the first contract. I have another bid at 201. I don't know if it's going to get filled, and it ends up getting filled in this case. It ends up getting filled. You see that? The market briefly goes below $2. And then I'm like, okay, it's below $2. It's going a little further than I expected. But then about 10 seconds later, look how it just skyrocketed up 20 cents. We're offered at 220 and then bang. Now we're bid at 228. Now we're bid. No, it's just flying up. We're bid at 240. In about 10 seconds, that all happened in the span of about 30 seconds, buying those options on that sell-off down, and then it starts immediately skyrocketing up. We're bid at 239, 240, 250, etc. And just look how fast this plays out right here. I immediately put in an offer to sell at 303 because I know approximately that's the range of where I want to be getting out of this. And look at this. Just look at this. Bid 290. Already $3 is on the offer. And you know, it does, I think it just does a little quick pullback or something, and I'm willing to get out of all of this. I mean, you know, that type of move doesn't happen very often, so I'm like, you know, I'm out, you know. So I'm out at 303 right there.
Wow, man.
And I'm out at 320, and I'm like, wow, that was easily the most perfect entry of my entire trading career. And that stuff doesn't happen every day. In fact, it never happens. That might happen once a year if you're lucky. That type of, you know, you get filled on a sweep and then it just slams up and you're just up $100 on every option.
Wow, what a monster trade that was.
I just want to say quickly that if you guys happen to be looking for assistance for using Trader Workstation or Sierra Chart, or if you just need some general advice or tips, you can check out my remote assistance service here at VerrilloTrading.com/remote-assistance. Go ahead and read this page, check out some of the testimonials and customer reviews, and feel free to send me an email as well. Another thing I wanted to quickly go over here is using a feature called Post Only to reduce your trade commissions. So these are the trade executions on the day, and you can see for every execution I'm paying always mostly less than $1 per contract. So you can see I'm paying about 80 cents a contract here. This one paid $1.05. And I think one of the reasons for this is because I've enabled a feature in Trader Workstation called Post Only, which means that your orders only get executed once they're matched with another trader's order, with another market order. And you can see if this is active if you submit a new order, for example, like this, and then you click on the order type box, for example, limit in this case, and then you can see the feature named Post Only is checked. And I've enabled this by default. I'm going to show you how to enable this right now because it's actually not enabled by default in Trader Workstation. So when you go up to File, Global Configuration, and you have to go to presets for the market that you're trading. So let's say options. And you also have to show all possible fields at the top, or else you won't see Post Only here. So if I show all possible fields, then you scroll down and then you'll get Post Only appearing. And then you can enable that by default on your orders. Now note that if you're trading less liquid options, that might actually hurt you more than help you, because it basically means your order is never going to be a market order. The only way your order is executed is when other orders get matched with your order. So it's a good feature if you're willing to wait for your orders, or if you're trading a market that has a lot of volume trading, like Tesla options, SPY options, etc. Because these are highly liquid, especially on options expiry. There's a lot of volume going through. For example, those 315 calls I was trading today, and puts, they have more than 100,000 contracts traded on the day. The calls are 167,000. So just to give you an idea of the kind of volume that's going through there, and you can even see it on the time and sales. There's consistent volume, more or less, trading on the options. Now it's quieter because we're later in the day, but I'd recommend using post only if you trade options on the open and you're trading highly liquid options, because it's going to result in lower commissions paid. Thank you very much. If you guys want to see a video of me helping another user get used to Trader Workstation, check it out right here. If you need remote assistance with Trader Workstation, check out this video to really get an idea of the service that I offer. Thank you for watching, and I'll see you in the next video. Thank you. Cheers.